November 2019, Dakika Limited has prepared its consolidated financial statements for the year to 30th September 2019, extracts of which are shown below. Also provided below are extracts of the consolidated financial statements for the year to 30th September 2018. So they've given us 2019 and 2018 figures. So I can see they've given me profit before interest and tax. So straight away, if I'm the one doing this, I will come and adjust the profitability to get the profit attributable to ordinary shareholders. Profit attributable to ordinary shareholders, profit attributable or available to ordinary shareholders. Here, I will take the profit before. I will take the profit before, I will take the profit before interest and tax. I subtract finance cost, which is the same as interest. And then I subtract, in this case here, the tax charge. I subtract tax there. And then, of course, I'll be able to come. I cannot subtract ordinary dividends because ordinary dividends are part of this. There's ordinary dividends, I cannot subtract them. From there, I'll come and subtract preference. I will subtract preference dividends. And then I can see this is a question that is of a group consolidation in nature. So I must come and subtract. I must come and subtract profit attributable to NCI. NCI like that. Profit attributable to NCI. Okay. So in this case here for the year 2018 and the 2019, am I able to see, ladies and gentlemen, these figures very fast now? Yes. I can see profit before interest and tax. I can see 7012, and then I can see 8830. You subtract, in this case here, the finance cost, which is the same as interest. So we have here 987 vis-a-vis what here 1045. I've interchanged them, eh? We are supposed to start with a smaller year. We have tax. So tax, what do we have there? Tax, we have 1718. And then we have here 1264. We have a preference dividend. We have 6060. And then lastly, we have NCI profits. So NCI profits here we have 160 and here we have 180. So if you subtract these ones very fast, what are you guys able to get as your PAUC? What are you able to get as your PAUs? Profit attributable to ordinary shareholders. It's like lightning speed, remember. So Fozia says that the first one is supposed to be 60. The first one is supposed to be 2018, the first one, according to Fozia. Unapata ngapi hapa somebody? 45, 41. Fozia angalia vizuri. 45, 41. How about the second year, 2019? The second year, what do we have? Abracadabra. The second year, what do we have? 58, 27. So hizi ni marks zinaingia tu. And if you allow mwalimu, then very fast, because we plan to do this in 5 minutes. Allow mwalimu to rub this. Is that okay? Have you taken a screenshot if you have not been writing? Thank you so much. It's lightning speed. Now from there, after getting PAUC, you come and give us one nose. Give us one nose. So one nose, ladies and gentlemen, I have 2 years. I will start with the 2017 year, 2018 year. I will start with 2018. So this 2018 year, what is the period end? The period end I can see is 30th September 2018. 30th September 2018, the period end. So in this case here, 30th September 2018. So meaning that this particular year is starting on when? It is starting the day after this, which is tomorrow. So tomorrow will be 1st of October 2017, where we are starting from. So it will be very important for us to pick this thing from here. Very important for us to pick this thing from there. So in this case here, have they given out? So we have the dates. We have the dates here. We have in this case here, cumulative shares. Right. We have in this case here, we have the fractions, the time fraction, the time fraction, the time fraction, and then lastly, we have our bonus fraction, the bonus fraction. So in the year 2017, have they given me anything to do with the shares that were brought down in 2017? Yes. You can see note number 1. Ordinary shares as at 1st October 2017, they were 15 million, made up of 5. So in this case here, you say beginning of the year 2017. This beginning of the year balance brought down shares, number of shares. Itakuwa 15 million divided by par value. 15 million divided by par value, which is what there somebody, which is 5, made up of shares of shillings 5, par value 5. So in this case here, they are telling me it is 3 million. So the answer here is 3 million. So transfer them here, 3 million. Transfer them there, 3 million. Abracadabra. If we are together, remember, don't touch these columns yet. If we are together, go to the next date, which is Dakika Limited, note number 2. Dakika Limited issued some 500,000 ordinary shares at full market value. On which date? 1st January 2018. Is 1st January 2018 well within this range? Oh, yes. So we have here 1st January 2018. We have a new issue at market value. This new issue at market value, ladies and gentlemen, is 500,000. When I accumulate, I will get 3.5 million like that. I will get 3.5 million. When I accumulate, I'll get 3.5 million like that. And then I go to the next note. Next note is note 3. Dakika Limited also made a rights issue. I love rights issues because I will harvest marks there really without even knowing what I'm doing. So Dakika Limited also made a rights issue of 2 new ordinary shares for every 10 ordinary shares held as at 1st April 2019. As much as I may love, in this case here, this rights issue for sure, 1st April 2019 is beyond here. 1st April 2019 iko kwa mwaka tofauti. Si ni ukweli? Iko kwa mwaka tofauti? Yes. So kwa hivyo tufungie hii mwaka tuifunge, hakuna kitu kinazuia sasa hapa. Hakuna kitu kinatuzuia hapa. Hii mwaka sasa tuifunge. So kuifunga vizuri uoye, tupatieni hapa time fraction. Time fraction, what do we have here? Time fraction, what do we have? 3 months. That is from 1st October 2017 to 1st January 2018. You count October, November, December. Don't count January because this was at the beginning. So times 3 over 12. This will be times 9 over what year? 9 over 12. Okay, we can't make those assumptions really, Lois. We'll start confusing ourselves because I will be handling that point in the next year, isn't it? We'll start confusing ourselves. Do we have any bonus or rights fraction here? Is there a rights issue that happened in this year? No. So here, nothing. So then come and give Mwalimu here the wanos. Give Mwalimu here the wanos. So how are we getting the wanos? You're taking this times this, you give me an answer. So according to Rose, it is 750,000. According to the second one now, I'm being given a figure of 26. 25,000. So then could you kindly add here the total wanos? What are we getting as our total wanos? 33. They're giving me a figure of 33 something. 3375. A figure of 3375. So what I will do, I will skip some space. Please, this is a table for wanos. Skip some few lines here, like even 5 of them. And then you go ahead and calculate for me for the year, if I'm the one, I'll harvest low-hanging marks first of all. So in this case here, for the year ending 2018, year ending this date here, I will come and calculate here the basic EPS for the year ending 30/9/2018 for this year. Remember, basic EPS, we are taking, in this case here, the profit attributable to ordinary shareholders all over, in this case here, wanos. For this year ending 2018, is there somebody who is able to remind us what our powers was? Is there anybody who is able to remind us what our powers was? Profit attributable to ordinary shareholders, 45.41. 45.41. All over the one-offs, which is 33.75. 33.75. 33.75. 33.75. So then when you divide, what are we getting? Somebody there? We are getting 1.35. And then if I'm the one doing this question, the following year there was a rights issue. Do you remember the following year? The following year, the year ending 2019, there is a rights issue. That rights issue must be carried retrospectively backwards to help us restate this. So for purpose of restating, I'll come and write there, rights issue. And for rights issue, I know I'll be required to calculate what we call the theoretical X rights price. I'll be required here to calculate the theoretical X rights price. So is there somebody who remembers that table for getting theoretical X rights price? I will write here shares. I will write here value. That's what I taught you in the morning to do. So shares versus value. And by the way, as I rush like this, is there any student who wasn't there in the morning class? Is there any student who wasn't there in the morning class and has come to this class? Any student? I suppose, oh, wow. Wow. Too bad, too bad, too bad, too bad. And there's so many. There's so many. There's so many. There's so many. I'm so sorry. I'm so sorry. I'm so sorry. I'll try to slow down a little bit. But look at how we're getting this theoretical X rights price. Theoretical X rights price. So to get this theoretical X rights price, they have told us this theoretical X rights price comes as a result of a rights issue, which was given in the coming year. And it's given there in note number 3. Dagika made a rights issue of 2 new. So we have here new are how many? 2. For every 10 old or held at the moment, for every 10 shares held there. So come and convert this now to money. So it is 2. The new ones will always go at a lower price. You'll always be given 2 prizes. In rights issue, you'll always be given 2 prizes. One prize will be smaller and the other prize will be bigger. The new shares, remember by definition, ladies and gentlemen, the new shares, we are saying something very important here, that theoretical, rather the rights issue is an issue of ordinary shares to ordinary shareholders at a discounted price. So in this case here, the new rights issue price must be lower. So they've given us 2 prizes there. We have the rights price, which is 42.5. So this new will be at 42.5. And then this 10 will be at this expensive price, which is the current market price, which is 48. Which is 48. 48. So is there somebody who can give me these values very fast? Is there anybody who can give me these values very fast? Is there anybody who can give me these values very fast? So in this case here, we have 85. And then here we have 480. So when you add the 2, you'll be able to get the total value. You'll be able to get the total value. So according to Kiro, 565, this 565. But now this 565 value is for how many shares in total? It's for how many shares in total? It's for 12 shares. It's for 12 shares. It's for 12 shares. It's for 12 shares. And therefore, ladies and gentlemen, the average price, which is our price in theory, theoretical price will be that 565, will be the average divided by 12, which gives Kiro there 47.08, which gives in Kiro there 47.08. 47.08. Thank you so much. Thank you so much. Thank you so much. So then, ladies and gentlemen, what we shall do there, we shall move straight away ahead and get what I taught you guys. I shall move ahead and get what we call a rights fraction. A rights fraction. A rights fraction. So rights fraction, what do we have? Rights fraction. Remember rights fraction? I taught you about rights fraction. I taught you about rights fraction. Rights fraction, we take the market value over the term. Market value over the term. So the market price or market value, the market value of these shares is 48. The market value of these shares is 48. So 48 divided by the theoretical X rights price. And the theoretical X rights price, you guys have given me 47.08. This, I will leave it like this. So we are calling it a fraction. Now from there, I will use now this backwards to remember this right fraction. This right here is for the other year, next year, 2019. But IAS 33 tells me to take these fractions and use them to restate previous years. So you come and tell us restated EPS, restated 2018 EPS. Is there somebody who can tell us what you're going to do to be able to get this restatement? Is there anybody who is able to guide us to be able to get this restatement? What shall we do to be able to get this restatement? What shall we do? We shall take the 2018 EPS, which is 1.35 times reciprocal of this. You reciprocate times 47.08 all over 48 times 47.08 all over 48. Reciprocal. So here we are moving forward to pick the ratios, bonus fractions, to pick, in this case here, the right fraction, and then we move back for a statement. So in this case here, Fozia tells me it is 1.32. Now, ladies and gentlemen, all of you, when I was seeing you answers, there is nobody who went further to think about the statement. Even if they ask you for basic, if you look at the marking scheme of CASNEP, they'll give you a mark for this. You must demonstrate both broad and deep understanding of the subject. Mary says, I did to show broad understanding. A good student who does this, then we'll always end up giving them some marks there. So then if you allow me, ladies and gentlemen, if you allow me, we shall be able to do this. We shall be able to go to the next year now. So this table, you close it. This one, we have closed it now. So now I'm on the other year. The other year is ending on 30th September 2019, starting on the following day. Following day is 1st October, but now 2018 because you're starting. So from there, we shall come right away here, make our table look beautiful, like this. So we start with this year, 1st of like that, 2018. We say balance of shares brought forward, balance brought down. So how many shares are we bringing down? How many shares? I know most students normally confuse and they bring, like Gideon is doing there, they normally bring down the one nose. You should never bring one nose is an average. I will bring this figure that is here. Gideon, you will never forget. Those are the shares brought down. This is what I book here. I continue with this line. I continue with that line. If Gideon B, I bring you a figure here, this line will not be in, thank you, will not be aligned. So we've been able to get the balance brought down. Now look for 2018 things. 2018 things, ladies and gentlemen, that I'm able to see there very fast, like in note number 3, I can see that Kika Limited also made a rights issue. So I have here on the 1st of April 2019, 1st April 2019, there was a rights issue. And this rights issue was 2 for every 10. It was 2 for every 10. 2 for every 10. So 2 of 10 times this 3.5 million times this 3.5 million. 2 over 10 times 2.5 million. According to Fozia, it is coming to 700,000. If Satan comes and whispers in your ears, if Satan comes and whispers in your ears, you will write here. Please, that Satan should always be, you need to tell Satan, go away. Because this is a column of cumulative. A column of cumulative. This is 700, I should write here. And then I come and add it to this. So that I get what here? 4.2 million. We'll come and get 4.2 million like that. All right. So is there any other activity? Look at note number 4. Note number 4, ladies and gentlemen, speaks about, the Kika Limited also had 1,000,000, 6%, 10 par value, non-redeemable preference shares at 1st October 2016. We shall not bring those shares here. These are table of one-offs, ordinary shares. We would have just brought that point here if there was any conversion. If there was any conversion. So then we are through with this thing. The only thing now we need to do is to come and start counting the number of months between two transactions, between this and this. How many months do we have there? We have October, November, December. We have January, February, March. How many months? Catherine Mudenji, you're the first lady I've seen who is able to count months well. Most ladies don't know how to count months well. So 6/12. Now that this is the last transaction of the year, this is the last transaction of the, we know that the time must balance. So this must be 6 over what year, somebody? 6/12. But now remember, this is a rights issue. Then we have what we call a bonus or a rights fraction. A rights fraction. We have a bonus or we have a rights fraction, to be precise. Is there somebody who is able to remember what the rights fraction was? We calculated it. Is there anybody who is able? 48/47.08, like that. Now, let me ask you a question. Thanks, Gideon. Are we going to write this bonus or rights fraction here as well? Do we write the rights fraction on the date when it occurred? No, no. Rights fraction, we normally write it on all the other transactions on top prior to these happening. It's retrospective. It is never applied on the very date or the dates after. It's backward moving, backward moving. So here I'll put a dash like that. It happened here, but this ratio can never come there, can never come there. So then, ladies and gentlemen, go ahead and give me this one was here, the last column now. So the one was the last column. I'm taking 3.5 million times 6/12 times 48/47.0508. I mean, what one else are we able to get here? What one else are we able to get here? What one else are we able to get here? What one else are we able to get here? So according to this gentleman, and I said 1787, the year that I was born. 1787, the year that I was born. How about this one here? This one is 2.1. 2.1. This is 2.1. 2.1 million. 2.1 million. So then could you kindly add and give us the final answer? Please add 1784. Somebody is saying it's 1784. 1784, 1784, 197. 1784, 197. Be very precise. Be very precise. So plus this, then at the end of the day, what figure shall we be getting here? Somebody 38, 84. 38, 84, 38, 84, 38, 84, 197. 197. So this is it. This is the total one-offs. And fortunately, we happen to be having PAUS C somewhere for 2019. We happen to be having PAUS for 2019. We happen to be having PAUS, don't we? We have PAUS for 2019. If I remember very well, you guys had given me a figure of 58.27. And therefore, my basic EPS for 2019 will be the figure that you guys have just given me of 58.27 divided by this figure here, 38, 84, 197. Remember, these were in thousands, eh? They were in thousands. Great questions there. Great questions there. Great, about 1.5. And really, all of you are able to get this. All of you are able to get this. Like there is somebody who called me. Actually, when I was sleeping, I'd explained to you, I was going to sleep. But somebody called me immediately when I had already started that important journey and told me, Mwalimu, you have assisted me. For so many, this person has done AFR 3 times. This is the first time this person is understanding somehow EPS. I don't know. I don't know. So is it in this case here the approach that our teachers are using, or is it that you guys tend to love this Mwalimu just naturally, such that even if he does something using a wrong approach, you'll just follow? There must be something there. There must be something there. Because you can't tell me that you've been taught. Actually, the person told me has been taught by now 3 different teachers. 3 different teachers. Natural love, okay. Great. Half day shift here. You need the morning video. You need the morning video by default. We shall overcome. So I would want to do one more question on diluted especially, but this time round, we will not really even try to finish the question really. We won't try to finish the question because the objective of this class was very different. And I would want us to do the May 2019 question number 4B. May 2019 question, May 2019 question number 4B. Once we are there, please say yes for why. May 2019 question number 4, boy. Question number 4, boy. May 2019. And then there is a question. There is a question that you guys have also asked severally. You have asked severally. I think it's high time now I address this question. And I'm surprised how comes you don't know it. I'm surprised how comes you don't know it. Please allow me first of all to address this question. It's very important. You see, in note number 4, these guys are telling me Dakika Limited also had 1,000,006%, 10%, or rather 10 par value, non-redeemable or irredeemable preference shares as at 1st October. So if I take 1,000,000 shares times 10, if I take 1,000,000 shares times 10, then these preference shares, the preference share capital, in terms of Kenya shilling, it will be that 10 times 1 million. 10 times 1 million, which gives me 10 million, like that. So then what in this particular case is the dividend. So in this particular case, the dividend, how will the dividend look like? Dividend. Remember, dividend here will be what here? The dividend will be 6%. Dividend is 6%, 6% of this 10 million. Could you kindly give me this figure? 6% of 10 million? Orenyo is getting 600. 600, 10%. They're getting 600. They're getting 600. 600K, right? So we have there, Dakika Limited also had 1,000,000, 6%, shillings 10 per value, non-redeemable preference shares as at 1st October 2018. As at 1st October 2018. Then there must be a problem there. You know, you can see they're putting that preference dividends paid in 2019 and 2018. They're putting this at 60-60. Are you able to see that? Are you able to see that figure of 60-60? Yeah. Then it means that that par value there should be how much? Should be 1. That par value there should be 1. What this examiner wanted to test you, and they would have made so many of you go to hell, is this. You know, for me to be able to get POW, listen to me, and I would want to simplify this as much as I can. So please, God help me. So if, for example, you are given here profit after tax, you are given here 10 million, and then they come and give you irredeemable preference dividend. They tell you this is 2. This is 2. And then they come and they give you here redeemable preference dividend. They tell you that this is 3, like that. And that is the only information given. And then they want you to calculate POWs. They want you to calculate POWs. Let me take this minute to address this thing once and for all, because I can see most of you are getting confused here. So they want me to give them POWs. So in this case, remember, ladies and gentlemen, normally, whenever you want to get POWs, whenever you want to get, in this case here, POWs, right? POWs. What do we do whenever we want to get POWs? Whenever we want to get POWs. Whenever we want to get POWs. So whenever we want to get POWs, ladies and gentlemen, please listen and listen to me very well. I will come and take this part, in this case, part, and then I will not subtract both dividends. I will only, in this case, here, subtract one of them. I will subtract one of them. I will subtract one of them. I will subtract one of them. Which one is this? Should I subtract irredeemable or redeemable? Mourinho is saying both. I have no idea. Irredeemable, redeemable. Most of them are saying redeemable, redeemable. Redeemable, redeemable. I can see redeemable. Irredeemable. Now, one thing you're supposed to know, ladies and gentlemen, one thing you're supposed to know, I'm so sure this is something that you have seen. You've seen in this case here happening severally. Maybe your teachers may have shown you this. That nowadays, the standards are tending to classify redeemable, 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 redeemable preference dividends are being classified as debts. They are being classified as debts. Because at the end of the day, redeemable preference shareholders, these guys here, you must pay them their dividends whether you're making a loss or not. You must pay them, right? And because these redeemable preference shareholders are being taken as debt, normally preference dividends for redeemable is accounted for under finance cost. Is accounted for under finance cost, such that when you see finance cost, we have the cost of bondholders and we have the cost of what here? Redeemable, because redeemable redemption means you'll return this money to them. So it means that whenever you have this part, already these redeemable preference dividends have been done what here deducted, because that finance cost, that cost is already well captured in the finance cost. So it means that at this stage, then I should be able to come and do what here to get these powers. I should take part minus what here, somebody? Irredeemable preference dividends. So whenever we have the two of them, but if you look at, for example, this sitting when they brought this, Kasneb gave the two solutions. Any student, even if you subtracted both of them, you still got it correct. But now the truth of the matter is, when you come outside here in practical, you realize that redeemable is debt. And any return over and above the debt borrowed given to these preference shareholders whose shareholding is redeemable, then automatically that return is normally well kept in the finance cost. Right? And that is why you'll get people telling you that take profit after tax minus irredeemable, because already redeemable has been done what here? Accounted for up there. But the most important thing, ladies and gentlemen, is for you to ensure that if you are confused, you do what you subtract both, because chances are the examiner will do what here? The examiner will just close his eyes and allow. And that is why if this examiner was right, this examiner should have said, Dakika Limited, are those 1,006% shillings, one par value redeemable? So if you use the word redeemable, then you should not have deducted the 60. That 60 would not have been deducted, because already that 60 would have been taken to be part of what here? Finance cost. To be part of finance cost. So I don't know whether I'm making some sense there. Or rather, what we are saying, ladies and gentlemen, is that where we have reached, if you're confused, you don't know which one to deduct. Instead of guessing, deduct what here? Deduct both. Because we shall defend that in any marking setup. We should tell them that these people, they are still toddlers. They have not mastered IFRS and IAS very well. Please, just allow them, because they have an idea. They have an idea of what is happening. Just allow them. Now, from there, then we can now comfortably go to May 2019, question number 4B. May 2019, question number 4B. May 2019, Thank you very much, Beatrice. Yes. Thank you very much. Thank you very much. Thank you very much. So May 2019 question number 4B. May 2019 question number 4B. Question number 4B reads, Tewa Limited has provided the following extracts from its income statement for the year ended 31st December 2017 and 31st December 2018. So I can see profit before tax. I can see profit before tax for these 2 years. So we have here 2017, we have here 2018. So you can see profit before tax, which is 950. No, do I need that really? No, they have actually given me profit after tax. This is the one that is most important to me. They have given me profit after tax. So profit after tax, we have 450, and then we have OTM, and then we have 650. Now, when I look at the capital structure reads there, ordinary shares of shillings are 100 each. Hata your concept ndio hii hapa sasa. You see kuna 8% redeemable preference shares. That one is hot air. 8% redeemable preference shares, it's a preference dividend. That preference dividend there cannot be subtracted when getting powers. Then I can see 10% convertible preference shares. That is interesting. That is interesting. Then I can see 10% convertible loan stock. Convertible loan stock, that is a loan, that is a bond. So it means that, you know, for us to have gotten to this area, I don't know whether these guys are able to see this. For us to have gotten to this area, we must have deducted finance cost somewhere. We must have subtracted finance cost somewhere to get to this. Are these guys able to see this really? Right? So in this case, you have to be able to get powers. I'll only come and subtract here. I will only come and subtract here less irredeemable. You less irredeemable, or convertible, preference dividends. Preference dividend, which in this case, ladies and gentlemen, will be 10% of 500. Will be 10% of the 500 given there. And it appears in both years, 10% of the 500. This gives me 50. This gives me 50, like that. And then I'll be able to get what we call the adjusted what year, the adjusted powers. If you look at the marking scheme, I believe I must have given you this marking scheme. You will see they were only deducting that 50. So it means I normally give you guys marking schemes, but you don't take time to, because you should have asked that question. How comes they were not subtracting? Why do we subtract convertible? You must have been told by your teachers that convertible preference shares is not part of your debt. Convertible can never be part of that, because later on, convertible, ladies and gentlemen, these guys here will be able to convert. I know two options. Will be able to convert their shares into equity instruments. So it means that they have given us a permanent source of capital. If they have given us a permanent source of capital, we take that to be irredeemable. We take that to be irredeemable. But anything like redeemable, anything like bonds, like interest, you cannot bring them here because already they have been deducted somewhere. They have been deducted somewhere. So are we together up to there, first of all, before I continue really shouting myself silly? Yeah, thank you so much. So then here we have 400, and then this is what here, 600 at the bottom line. In max natembea too. In max natembea. So now we have powers. For the students who never joined us in the morning here, stands for profit attributable to ordinary shares, ordinary shareholders. So thank you very much. Now we can go to the second part. Not the second part, but you know, they wanted us to give them basic EPS for 2017 and 2018. This is so easy, really. There's nothing really to be done. Nothing really. So here, now that I've gotten the powers, now I want the 1OC. 1OC, I cannot combine 2 years at the same time. I normally see people combining 2 years at the same time for 1OC, but I think those are people who are even cleverer than myself. Those are now the geniuses. Those are geniuses. They're geniuses. I fear doing that. I always love, like if it is 2018, I would want to know the year ending. This is a good examiner. The year is ending in December. I will get everything. I will get everything. Me, I like years that end in December. Sina kusumbuka kuhesabu sana. So nitaanza na 2017. So yeah, 2017 is December 31st, December 2017. So it must start the following day. So the following day is 1st of January 2016. Like that. This is the schedule for Wanos. This is the schedule for Wanos. This is the schedule for Wanos. So I will come here very fast. And remember, as you do this in an exam, please, ladies and gentlemen, you should never go to an exam when you are very sad. You must always, you must always be smiling. Always. Always. 1st January 20. No, Stephen, no. Stephen, remember, tuko na 2 years. Ama wanataka tuwapatie 2 ya mwaka moja. Hawataki 2018 peke yake, Stephen. Wanataka 2016. Wanataka miaka ngapi kwani? Kwani wajamaa wanataka ama in 2019? Kwani wanataka miaka ngapi? Two years, eh? Oh, what a fast. Twende pole pole. Mmoja wetu amechanganyikiwa. Twende pole pole. So for year 2017. 17-18, eh? 17-18. Twende pole pole. Twende pole. Tuache wasiwasi. The year is starting. No, I'm not, you know, there are 2 years. There are 2 years they have given me. I have to start with the earliest year given. The earliest year given is 2017. Look at even the powers. You have powers of 2017. 2017, I know now what they're talking about. We are tired. We are very tired. Thank you so much. We shall overcome. Thank you so much. Now tuende pole pole. So wanasema part of the increase in the share capital ordinary was due to a rights issue that was made on 1st April 2018. A shareholder was granted the right to buy 1 new ordinary share for every 5 ordinary shares held at a price of 120. The market price of the ordinary shares before the rights was 125 per share. I will not even go anywhere. What I'll do, of course, I'm leaving huge spaces. But whenever I see a question on any statement on rights issue, nitakuja hapa kwanza nimwandike mimi sina hapa kuacha space, unaweza hata space ya hizi kama line kama 10, lakini hii nitamngaria hii in this spirit ya kusmile, nitamngaria rights issue. Tashangaa sana. Namwandikia namna hiyo rights issue. Wamesema namna gani huo hii rights issue? Lakini pia lazima uandike date kwamba hii ni ya April 2018, eh? Remember rights issue hata kama nizo huko mbele lazima uzifanye mapema because of what the statement. Hiyo haina normal kufanya mapema. Aya, wamesema a shareholder was granted the right to buy 1 new. So we have new is 1. And then to buy 1 new for every 5 ordinary shares. So in this case here, the old shares are 5. Then have they given me the prices? So the new share must always go for a lower price. So in this case here, to buy 1 new for 120. So the new price is 120 there. And then the old shares are going for the market price, 125. Thank you very much. So 5 times 125. Hapa itakuwa 120. Itakuwa ngapi? Somebody 5 times 125. Itakuwa 625. Thank you very much. So please come and give me the total value. Please add for me. So when you add for me, we are getting 875. So ukija hapa 1 over 1 plus 5, I mean, to get the total number of shares. These are shares. So after the rights, shares will be how many? There'll be 6. And therefore the average here, if you divide this, the average, ladies and gentlemen, yeah, of course you're dividing this and this, will be 875 all over 6. And whatever you get there will be called the TERP. So the TERP in this case here, we have 140 something. Is it 745? Who got 875? I don't know. That's not me. So it is 745. And then we have here 745 divided by 6. So the theoretical X rights price will be 745 divided by 6, which is 124.17. 124.17. And then from there, remember, we leave these words, ladies and gentlemen, in this case here, by at times scaring one another. So there's nothing wrong in scaring the examiner. Scare these examiners. Scare him out of his skin. He should run away and leave his skin behind. So in this case, you scare him by telling him that you know how to calculate the rights fraction. Scare him. He'll think that he's marking a script of a very bright student, and that is the case, really. You're bright. So rights fraction, write for him the formula. It's market value all over the term. All over the term. All over the term. So then the market value, is there somebody who is able to see the market price here? The higher. Market price is the higher. So it's 125. It's 125. It's 125. All over 124.17. All over 124.17. All over 124.17. This is so important to me. I'm telling you, as other students are looking at the ceilings and whoever who is near a window looking at the clouds and trying to count, I don't know where they normally count, because I've also been an invigilator severally. Our students are doing crazy. You are doing fine. These things will give you marks, which will make you see places that you have never seen before, right? Because there are very few students in Kenya who will be able to even get this working. Trust you me. The kind of things we normally see them writing formula, G what after what after what, the bonus, G bonus fraction in the rights. Why? Why? Why do you want to kill yourself when you're very young? Great, 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 great. So thank you so much. So you go to note, this happened in 2018. Note number 2, the convertible loan stock was issued on 1st July 2017. Each shillings 1,000 loan stock is convertible to 25 ordinary shares. Holders of shillings 300 million worth of convertible loan stock exercised their rights on 1st January 2018. They never exercised here. So it means that this 2017 year of mine is fine. Is a nice year. Is a nice year. Because I can see nothing much really happened, which will affect my water, which will affect my basic. Then I go to note number 3. Note number 3, the convertible preference shares were issued in the year 2015. One convertible preference share is entitled to one new ordinary share. To one new ordinary share. Those are convertible. Those are dilutive financial instruments. They will affect us in Roman 2 of the question, where they want us to give them the diluted EPS. And then note number 4, meanwhile, on 1st April 2018, the company granted its employees the option to buy 4 million ordinary shares at a strike price of shillings 120 per share. No employee had exercised their right by 31st. Again, we know that stock options are dilutive financial. I don't even continue reading. I'll leave that. Ladies and gentlemen, imagine there is nothing that happened at all which will disrupt my number of ordinary shares in 2017. In 2017, the one-nose table is what we call 2017 one-nose table is what we call hot air. This is hot air. Is hot air. 2017, I'll change this. So in 2017, basically, then I'll be able to get my basic EPS. My basic EPS in 2017. I will take the powers and the one-nose seal. The powers that you guys gave me in the year 2017, the powers that you guys gave me in the year 2017, I have forgotten. Is there somebody who can remind us the powers? The powers that we got in 2017, 400,000. So then, is there anybody who is able to give us the number of ordinary shares that we stayed with in the whole of 2017? Please go to the balance sheet and read for us the number of ordinary shares in 2017. Read it for us in 2017. Kelly tells me that the ordinary shares there of 100 each. 100 each. 2017, I can see 2,000. I can see 2,000. 2,000. So 2,000 is what we call share capital. You must divide by the par. You must divide by the par. So 2,000 divided by 100. This will give me what here? 2,000 divided by 100. This gives me 20. This gives me 20 shares, 20,000. 20,000. The figures are in thousands, eh? The figures there are in thousands or millions or whatever. What are they? They were in millions, in millions, in millions. You guys, I don't know how you got this 400,000, but I think it should be just 400. I think it should be just 400. Just 400. If you're not wrong, it should be 400. It should be 400. It should be 400 over 20. Not to confuse those zeros. It should be 400 over 20. 400 over 20. So then what are we getting as our basic? What are we getting as our basic over 20? Yeah. What are we getting as our basic EPS? Basic EPS 20. Then very fast, because I know there was a rights issue in 2018, I will come and tell them restated EPS. Restated EPS will be, in this case here, the basic EPS 20 times the rights fraction times the rights fraction, but reciprocated. Are they able to remember the rights fraction very well, really? Are they able to remember the rights fraction really very well there? Are they able to remember the rights? Yeah, you reciprocate, right? 124.7 all over 125. 124.7 all over 125. So is there somebody who is getting something like 19.87? 19.87. Great. Great. Note 3. The convertible preference shares were issued in the year 2015. One convertible preference share is entitled to one new ordinary share. That cannot affect our basic EPS. It's convertible, they are to convert in the future. So that will be able to affect us, but in which way? Diluted, which is number 2. So hii sasa tumeepuka. I can see a hand up, ameteremsha haraka. So ladies and gentlemen, then can I go to the next year? Can I now go to 2018? Can I go to 2018? 2018, yes. So 2018, sasa hapo kuna maneno na majineno. Hapo kuna maneno na majineno. 2018 ni mzuri sana. It's 1st January 2018. Napenda 2018 sana mimi. To 31st December 2018. Napenda sana hii. Haya sasa, kuja hapa tuko na date. Hapo kuja useme cumulative shares. Hapo kuja useme time fraction. Ukuja useme hapa bonus fraction. Hapo kuja useme mwisho wanos. Ukuja useme mwisho wanos. Mwisho useme wanos namna hiyo. Mwisho useme wanos namna hiyo. Useme wanos namna hiyo. Great, thanks Elizabeth. So then come here very fast and give us the balance brought down of ordinary shares. How many shares are we bringing down here? How many shares are we bringing down to the year 2018? They're telling me 20 there. These guys are bright. The shares outstanding in 20. So this is 20. So 20 comes there. You smile. You go to the next date in 2018. Next transaction in 2018 happened in note number 1, the one of 1st April 2018. So we have here 1st April 2018. We had a rights issue of how many shares? It's 1 new. It is 1 new over 1 new. 1 new over what here, somebody? 5 over 5. 1 over 5. It's 1 for 5. So 1 for 5 times who? Kibao. Here outstanding at the beginning. Total. We also have a January transaction. I'm being told that we have a January transaction. Which transaction is this? Look at note number 2. The convertible loan stock was issued on 1st July 2017. Each shillings 1,000 loan stock is convertible to 25 ordinary shares. Holders of 300 million worth of convertible loan stock exercised their rights on 1st January 2018. Anataka confuse, anataka confuse. Anataka confuse, anakupatia hapa 2 transactions kwa same day. Anakupatia 2 transactions kwa same day. Imagine. Kwa hivyo unafaa kuja useme hapa 20 to get the total number on this day. Useme 20 plus the converted shares. And the conversion ratio wamesema ni ngapi? Wamesema ni 25 for 1,000. 25 for 1,000. And it is 300, guys. Is it 300 million? It is 300 guys. 300. Leave alone the millions away. Leave out the millions. 300 worth of convertible loans were converted. So it is 25 over 1,000 times 300. So take 20, you take 20 plus this. Ndio kuwe na answer moja tu. Ukuwe na answer moja tu. Wanasema 95, I don't know. It cannot be true. Use your calculator. Please use your calculator. Just take 20 there plus 25 times 300 over 1,000. It can't be that huge because this is, you know, itakuwa 0 point something, 7.5, itakuwa 27.5. Final answer itakuwa 27.5. Hebu confirm. The final answer itakuwa 27.5. Why am I combining this and this? It is because in EPS, whenever 2 or more transactions happen in one day, even in Excel, you are supposed to consolidate. Remember, we brought forward how many shares? 20. And on the same date, 1st January 2018, we had a 300 share preference share capital that was converted. Converted using what ratio? 25 new shares for every 1,000 bond value. 25 new shares for every 1,000 bond value. Then I'll take 25 over 1,000 times the bond value, that this 300. It was 300 million, but 300 times the 300 million bond which were converted. So if you take here 20 plus this, then you're getting 27.5. Then now go to the next date. The next date, ladies and gentlemen, is 1st of April 2018. So 1st of April 2018, this is where we had a rights issue. And my rights issue here, they have told me in note number 1, this examiner was a nice examiner. In note number 1, my rights issue is 1 ordinary share for 5. So it is 1 for 5 out of the total outstanding. So take 27.5 divided by 5. What are we getting? 27.5 divided by 5. What are we getting? 27.5 divided by 5. Lily says it is 5.5. It's 5.5. This 5.5 by the way is supposed to be here. 5.5. So 5.5 plus this to get the cumulative, what do we have? 5.5 plus the next one, the cumulative. What are we getting there, somebody? 33 like that. Is there any other activity that happened in 2018 that led to our shares literally increasing? I can see nothing in note number 4. I can see nothing in note number 3 either. So then there I am, good to go. So count number of months. So number of months, what do we have here? From 1st of January to 1st of April. Those are 3. Nobody needs to be a genius there to count. These are 3. So it is 3 divided by what here, somebody? 12. It is 3 divided by 12. It is 3 divided by 12. Note number 5, corporation tax. Will it come really here? I've never seen corporation tax coming in OneNote. Note number 4, meanwhile, on 1st April 2018, the company granted, they granted its employees the option to buy 4 million ordinary shares at a strike price of 120 per share. No employee had exercised. So we never got new shares out of that arrangement. The stocks will affect us in terms of the dilution. It was not exercised, yes. So 3 over 12, and this one is 9 over 12 like that. Now listen, remember this is a rights issue. Is there somebody who is able to remember the rights fraction that we had computed up there? Is there anybody who is able to remember the rights fraction that we had computed up there? Rights fraction that we had computed up there. Anybody who is able to remember? And remember, this rights fraction cannot be put here. It's prior years, prior transactions. So it is 125 over 124 over 124.17. Thank you so much. So here there is nothing. So then could you kindly come and give me the one was here and here? You take this times this times this, give me a figure. You take this times this times this, give me a figure. So what are we getting there for 1-nose? What are we getting there for 1-nose? What are we getting there for 1-nose? So somebody is telling me it is 6.92. 6.92, the first one. The first one, I'm being given a figure of 6.92. How about the second one? How about the second one? 33 times 9 over 12. 33 times 9 over 12. That gives me 24.75. So when you add, you'll be able to get the total 1-nose. The total 1-nose. The total 1-nose. When you add the two, you should be able to get the total 1-nose. 31.67. 31.67. 31.67. 31.67. 31.67. 31.67. So now we have here 31.67, like that, 31.67. So once I get this, now I can easily give you the basic earnings. Basic earnings, basic EPS. Is there somebody who is able to remember the powers of 2018? Is there somebody who is able to remember the powers of 2018? The powers, we had to compute the powers up there. We had to compute the powers up there. We had to compute the powers up there. Powers, yes, 600. All over what here? Somebody 31.67. All over 31.67. So what are we able to get as our basic earnings there for 2018? Somebody is telling me it is 18 point what year? It is 18.95, like that. The time proration, the time proration, the time proration. We look at the time between the two transactions, time in between. I know you are used to this approach where you take like from the beginning, like now from 1st January to December, you say times 12 over 12. That approach is equally good, but if you use that approach, then you don't use this cumulative. But for the time number of years that I've taught, actually, I've really taught this IAS 33 a lot. There is even a time I was the single trainer at ISPAC, teaching in this case here consultants, etc., the IASs, this IAS 33 especially, right? I discovered that when I put cumulative like this, everything in Indiana, Missouri. But again, if you are here and you feel the other method is also good, please use it. At the end of the day, you'll get the same answers. You'll get the same answers. And if you don't get the same answers because I was also trying, quality you know brought forward. To make it not brought forward, you brought forward day 20. Which you go 20, you can add easy. I took you not brought forward. I took you not brought forward. Trust you me. Mary, angalia vizuri. Angalia vizuri. Must be restated, yes. Must be restated. Must be restated. Thank you. So Fozia ametupa mbao. Fozia ametupa mbao. Fozia amerestate. Fozia amerestate year 2018. Is it good for Fozia to restate year 2018? Kwani kulikuwa na rights issue ya 2019? Because you can only restate year 2018 kama kuna rights issue in 2019 ama bonus issue in 2019. Yini inafaa yes. So ukiangalia our total in the capital structure, in our capital structure includes kuna matotal, lakini sitaki tuende approach. Irene says, mwalimu, it doesn't matter what, But at least now I can, we restate for the previous year. At least Fozia amesoma hiyo. Fozia alikuwa amefikiria ati sasa anaweza kudemonstrate broad and deep understanding in that area. Amegoka mwamba. But again, if I'm a student, I would rather be doing that so long as I'm filling up what here, my paper. So long as I'm filling up my paper. So long as I'm filling up my paper, then I will be very comfortable, much better than somebody, again, who is gazing at the ceilings. Those students who gaze at the ceilings, I really sympathize. Say something about share split. Mary, sijakuona umeuliza namna gani? You know, such kind of a question, Mary, now you can try it at your own time. You can try it at your own time and then see whether you're getting the same answers. Yes, if you take 1st January and then you take 1st January, but now the problem comes when you're counting number of months. You may say that from this now to this is 0. 0. Somebody may say now 1st, you know, you have got what she's asking. We have here 1st January 2018, 1st January 2018, and then now we have 1st April 2018. So now we are getting the time proportions. Now, at least from here to here, now I'll be able to say, so it means you start, if there are many of them, then you start saying times 3 over 12, 3 over 12. So you need to go and do it on your own time and see whether you'll get the same answer. See whether you get the same answer. But normally what we do whenever there are many transactions happening in one day, as well in Excel, you combine all of them in brackets. You hit enter button, pop, na kupatia answer once. And that's the approach I would want us to take. Great, great. Now from there, we go to the dilutive EPS. Dilutive EPS. We shall overcome. We shall overcome. Now, can we go to the dilutive EPS? Dilutive EPS. Dilutive EPS. Can we go to the dilutive EPS now? Before I talk of share split and share consolidation. You know, there is a share split and share consolidation. So we go to the dilutive EPS. So then in this case, ladies and gentlemen, normally what we do, we look for dilutive financial instruments. Do you know those financial instruments that have got dilutive capabilities that may reduce EPS? Do you know them? Do you know them? Which ones are these? Do you know them? Which ones are these? Which ones are these? Like stock option. Actually, always start with stock option. Always start with stock option. Always. So the first one, always start with stock option. And then normally what I advise my students to do whenever they tell you to do dilutive, convertible. Whenever they tell you to do dilutive EPS for 2 years, itakusumbua sana 2 years. Utapoteza time yako yote hapo. Wewe fanya mwaka moja peke yake. Fanya mwaka moja peke yake. Hiyo nyingine wachana na utapata marks zote. If you look at the marking scheme, they normally use those things like any 3. You get everything. Because ukijaribu kufanya comparative like this item here, this item, that comparing 2 years kwa working a dilutive makes everything very complicated. So in this case here, I will do for 2018 alone. Or rather, if you insist to do for 2 years, then don't do it like columnar. Do for 2018 maliza kwanza, then uende kwa 2017. Lakini ikiwa ni mimi, because I know, like you can see this question myself and I'm very fast. I'm trying to look at my speed. I've done this question for more than 30 minutes. More than 30 minutes, which is very bad in an exam. That's very bad. Because I'll figure out for 40 minutes, you're the extreme. Ukishafanya tu basic EPS, umefanya restating, so ukienda kwa dilutive kama umepotea miaka moja ama miaka mbili au miaka tatu, we choose the most current year. Just work with the most current year. So tuanze na stock options. So stock options, I will start right away with the percentage of dilution. Percentage of dilution. Percentage of dilution. What do I have here? And the percentage of dilution. So percentage of dilution. Meanwhile, on 1st April 2018, the company granted its employees the option to buy 4 million ordinary shares at a strike price of 120 per share. No employee had exercised the right 31st December 2018, the average market price of the ordinary shares is 125. So when these guys, remember these are senior management, we are going to give them shares at a discounted price. It is this discount that will kill us. So like the shares are worth 125, but we're giving them these shares at 120. So then the discount here will be 125 minus 120. To convert this to percentage, you divide this by the original times 100. You give me a figure. 125 minus 120 divided by 125 times 100. What are we getting somebody here? I like what Candy is telling me. Candy, how I wish I had money. If it was a good date, I would have sent you, Candy, a very good money. But the date is not very favorable, so please bear with me. 4%. 4%. So then how do I get the additional shares? Here, additional shares. Additional shares, you take the stock options given, times the percentage of dilution, times the percentage of dilution, like a consultant, great, times the percentage of dilution. So the stock options that we have, ladies and gentlemen, the stock options that we have, they are 4 million. 4 million times 4%, which gives us how many? How many shares? 160,000. Ladies and gentlemen, should I give these share options? Do you think in this case here, my profit after tax will increase? Do you think if these guys take shares, there will be no savings? There will be no savings at all. So additional part is 0. So come and consider, you guys told me this is a method you like. Come and consider the time proportion. Please tell me, these shares, these particular options were granted on 1st April 2018. And now we are doing dilutive EPS as at the end of 2018. Can somebody in this case here count the number of months that we stayed? Can somebody count the number of months that we stayed? Can somebody calculate the number of months that we stayed with these things over the year? So you come and adjust this times 9/12 and also the shares times 9/12. You give me an answer. Give me an answer. Give me an answer. Now they are not talking to me. 120,000. Thank you very much. 120,000. So after getting this, what do you think will be the next thing to be done? What do you think will be the next thing to be done? 120,000 shares. You divide. Thank you very much. So come and give us what we call the potential increase. We talk of potential increase in EPS. You take the profit here, you divide by the number of shares, 120,000, you write there 0. The potential increase in EPS. Now, ladies and gentlemen, we also have some other convertible instrument. A convertible instrument is a potential dilutive instrument. We have note number 2, which talks about convertible loan stock given there convertible loan stock. So number 2, you mentioned there number 2, convertible loan stock. So convertible loan stock, I have to rub this, unfortunately. So convertible loan stock. Most dilutive. Kendi umejua AFR. Kusema ukweli Kendi umejua AFR. Sasa hapo unakuja unamwandikia number 2. The dilutive instruments, convertible loan stock. So convertible loan stock, I'm interested in the interest saved. Should these guys convert in 2018, remember, should these guys convert in 2018, then how much shall we really save? Wanasema note number 2, the convertible loan stock was issued on 1st July 2017. Each 1,000 loan stock is convertible to 25 ordinary shares. Holders of 300 million worth of this convertible loan stock exercise their rights on 1st January 2018. So then let me see. So then, ladies and gentlemen, I will look at the interest saved. So interest saved, this loan stock that they are talking about, convertible loan stock, is there somebody who is able to see their rate of interest anywhere? Is there anybody who is able to see their rate of interest anywhere? Their rate of interest anywhere? Their rate of interest convertible, their rate of interest anywhere. Their rate of interest is 10%. Yes, it's given in that table. 10% convertible loan stock. So I will take 10%. And in the year 2018, the whole of 20, is it the whole of 2018? Is it the whole of, yes, because those guys exercised their right on 1st January 2018. In the whole of 20, remember they used to be 1,500, if you remember. The convertible loan stock in 2017 were 1,500. 300 were converted. So tulibaki na loan outstanding ilikuwa ni 1,200. The loan outstanding here ilikuwa ni 1,200. Loan outstanding up ilikuwa ni 1,200. The loan outstanding pale ilikuwa ni 1,200. Right? And then remember, we'll only save, this thing will be net of tax. You must come and multiply. Remember, interest saved is the interest amount into 1 minus tax. And tax, they have given us their tax as 30%. So then can somebody give me this answer? 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 What are we getting? Somebody there. Oh, they don't want to talk to me. Oi. 84. Thank you so much. And then now you'll go ahead and give me the additional number of shares. So additional number of shares. Should the conversion happen in the future? Should the conversion happen in the future? Have they given me the conversion rate? Have they given me the conversion rate? Yes, they have told me it is 25 for 100. It is 25 for 100. 25 for 100. So I'll talk of 25 for what here, somebody? For 100. Mary Ann, remember here, we are looking at what will happen in the future. We are not looking at what has happened. We are looking at the outstanding because we are looking at dilutive. What can be converted in the future? What can be converted in the future? Thank you very much, Manoti. So 25 over 1,000, actually, somebody is telling me it's 25 over 1,000. 25 over 1,000 times how much? The total amount to be converted here is 1,200. Total amount to be converted there is 1,200. 1,200. So then this gives me how many? This gives me how many? This gives me how many? How many? This gives me how many? Wanasema mwalimu, hizo ni 30. Hizo ni 30. So mpaka hapo tuko pamoja kweli? Additional, if they convert, remember the 1,200 bond. If they convert today, how many new shares will we get? How many new shares will we get? So then please go ahead and give me the potential increase. The potential increase in EPS. It will be the 84 divided by 30. 84 divided by 30. 84 divided by 30. 84 divided by 30, which will end up giving me what figure? 84 divided by 30, which will end up giving me what figure? Oh, yeah. Which will end up giving me what figure? Oh, yeah. Which will end up giving me what figure? 2.8. Thank you very much. Now, is there any other convertible instrument? Is there any other convertible instrument, or that is it? Is there any other convertible instrument, or that is it? Yes, which one? Yes, which one? Any other convertible instrument? Any other convertible instrument? Yes. Yes, which one? Which one? If you look at the capital structure, you'll be able to see note 3. We have convertible, yes, preference shares. So we have convertible preference shares. We have a convertible preference shares. And if you allow me, then I'll be able to grab this. if you allow me, I will be able to rub this. And then I come and write there very fast. The last one, I'm so happy. The last one, I will come and write number 3, convertible preference shares. 2018, remember, I'm working on 2018. So should these guys convert, I'm going to save dividends. I'm going to save dividends. So in this case here, preference dividends saved. Preference dividends saved. How much are they paying today in 2018 as preference dividends? How much are we paying today as preference dividends? How much are we paying today as preference dividends? How much are we paying today as preference dividends? How much are we paying today as preference dividend? Actually, I want this ID. 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 8% of 1,000? I don't think so. I don't think so. Remember this, thanks for raising up that, but remember these are for the convertible. Please check again. It's for the convertible. Thank you very much. So it is 10%, 10%, 10%, 10%, 10% of 500, which gives me 50. Let me ask you a question, you great students of mine. Am I going to effect the taxes here? Taxes and dividends, do they work together? No, they don't work together. No. Tax savings is on interest, not on dividends. So then go ahead and give me the additional. Go ahead and give me the additional number of, should these guys here decide to convert? Should these guys here decide to convert? What will happen? What will happen? Remember, wamesema the convertible preference shares were issued in the year 2015. One convertible preference share is entitled to one new ordinary. So unasema one new ordinary. One new ordinary over one new preference, over one preference share, over one preference share. So then the question is, how many preference shares do we have in total? Not preference share capital in shillings, not preference share capital in shillings, but number of preference shares. Is there someone who can see how many preference shares do we have in this question? How many preference shares do we have in this question? All right, there are 5, isn't it? There are 5 years. There are 5. So times 5. Times 5. So it means the additional number of ordinary shares will be this times that times 5. So 5. And therefore the potential increase in EPS will be this 50 divided by 5. 50 divided by 5, which will give me what, somebody there, which will give me 10, isn't it? Will give me 10. So is there somebody who is able now to rank those 3 components? Rank them. The one that has got the smallest potential increase in EPS is the one that you give number 1. 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 Number 1 is the one that you give number 1. Let me see what we have. So of course, stock options will be number 1. So stock options will be number 1. Stock options will be number 1. Or I've seen here there is no time apportionment. So stock options will be number 1. And then number 2, we shall have what here, somebody? Number 2, loan stock. Number 2, loan stock. Number 3, in this case here, what here now? The convertible. Now, ladies and gentlemen, if you remember very well, I'd shown you now how to really patch up those things. I want to believe now you can patch them up for you to be able to do what here? For you to be able to get the EPS diluted in 2018. After all, please look at it this way. How many students will be able to get this correctly in Kenya? If you're able to do even for 1 year, you are a very, very bright student. Actually, top 10 in Kenya. Top 10 in Kenya. Top 10 in Kenya. Top 10 in Kenya, I can assure you. Top 10 in Kenya. Because most students I don't know, and maybe it's because of now maybe the experience you're getting outside there, most students in Kenya tend to fear any question to do with what here? EPS. Lily, even you should be able to do. That's what I prophesy to you, Lily. You should be able to do this. You don't have to get everything, but at least. So, ladies and gentlemen, I would want again to